Most people think you need banks or a rich uncle to fund your first real estate deal. But what if I told you there were regular people out there right now that you know that their numbers are in your phone that can fund your deals? They want to give you their money. They may not know that yet, but trust me, they do. You just have to have the right conversation and lead them to that. In this video, I'm going to tell you step by step how to find private lenders, what to say to them, including your 15-second introductory elevator pitch, and how I've raised over $60 million from normal everyday people. And as a bonus at the end of this video, I'm going to give you my 4-pillar pitch, which is a pitch that I traditionally save just for my students, where I'm going to walk you through the 4 pillars that I have used to pitch to raise that $60 million. If funding is a reason you're not investing in real estate, you don't have that excuse anymore after this video. If you're looking to raise money to invest in real estate, hit that like button. All right, let's settle in and specifically talk about private lenders. Let's start out with what they are not, and then let's talk about what they are. Private lenders are not usually a rich parent or somebody you're related to. They're usually, probably actually never the mafia. They're not a business or a corporation. They are normal, everyday people. You see, most people don't get private lenders or understand private lenders or get private lenders money because they don't know where to look. They're looking in all the wrong spots. They think they can't find anyone, or they think it's somebody in the mob or the mafia, or somebody with tens of millions of dollars in the bank. That is not your typical private money lender. So if you understand where to look, then you can start to get some traction to actually raise the money. And if you're starting to roll your eyes thinking that you're not going to get anything out of this video because I'm just going to tell you to go to your neighbor, you're wrong. I went from the middle class to owning $50 million worth of real estate and doing over 1,600 flips and wholesales, all using private lenders' money. So I promise this works. And if you change your angle and change your perspective, you will start to raise money. Your typical private lender is going to be someone in their 50s, maybe late 40s, maybe early 60s, but definitely in that 50-year-old range. Their kids are probably in high school or college. They have a good, stable W-2 middle-class job. We're talking insurance agents. We're talking engineers. We're talking police officers. We're talking teachers. We're talking firefighters. We're talking sales managers, architects. Normal middle class, maybe upper middle class people that have worked for a long time for a job or a few jobs. They have a stable household. They probably lived in their house for the past 15 or 20 years and at their job, and they're normal conservative investors, meaning they contribute to their 401k every single month. They have an IRA that they contribute to. They have money in the stock market. They have it in bonds as well. They probably have a money market account, and they have some cash as well as equity in their house. They have all this money that they're planning to retire on, most of which they can't touch for at least another 10 or 15 years, until they're 60 years old, if we're talking 401k and IRA, and they're potentially looking around and thinking they may not have enough to retire, especially with what the stock market has done over the past few weeks, and especially with what the cost of living has done over the past few years. This is a prime opportunity for you to go to them when they are potentially looking to diversify. And that's what you're asking them to do. You're not asking them to take their entire retirement fund and throw it on black at the casino on roulette, or throw it into crypto or even a stock. You're giving them a very, very stable way for them to diversify their investment portfolio, specifically diversify their retirement plans. Now, those jobs that I just mentioned earlier, those were not random jobs. Those were the jobs of my private lenders. I have 3 insurance agents that I borrow money from. I have 2 engineers that I borrow money from. Again, these are normal, everyday jobs. These people make $100, $175, $150, $200,000, $90,000 a year. These are not people making tens of thousands of dollars a month or with millions and millions of dollars in the bank. They have access to funds that they may or may not know they have access to. HELOC, home equity line of credit, 401k they can borrow against, IRA that they can self-direct, and a lot of other vehicles that they don't even know maybe that they can access that money now, and they probably don't know that you're even looking. So you can see the disconnect. They don't maybe know that they have the extra money to lend, and they don't know that you're looking because you haven't talked to them. Of course, you're not going to raise money from them if that is where you stop. However, if you live in America and are watching this video and you have a cell phone, I promise you that you know a private money lender. Now, you have to be consistent and persistent. You're not going to raise money from one simple text. However, you have to start to plant the seed that eventually will come with the ask and my pitch I'm going to give you at the end. But you have to start to have these conversations and just plant seeds at your local church event, at a golf outing with your buddies, hanging out at a family reunion, talking to your parents, at work, at the water cooler, everything that you do on a daily basis when you interact with other people. If you want to make it as a real estate investor and if you want to start to raise money, you need to understand that those are opportunities not for you to raise money every single time. You don't need to be just telling everybody and knocking on their door and being aggressive and saying you need money from them to invest in real estate. That is not the play. That will not work. But however, if you're able to plant the seeds and water them and cultivate them, to go with this extremely corny metaphor, they will start to produce trees, maybe even money trees. Money trees. All right, once you're planting the seeds, you're going to be having conversations with people. So let's talk about what that initial kind of elevator pitch is. It's 15 seconds or less. You're gonna make it your own. You can throw it into ChatGPT if you want to customize it a little bit. You're going to be having conversations with people, and I'm going to give you a quick 15-second elevator pitch that you can use to start the conversations off on the right foot. Now, of course, you should be customizing this and making it your own a little bit. You can throw it into ChatGPT if you want for ideas. In general, this is the type of conversation that you should be having. Here's generally what I would say, and this is you having a conversation with a private lender or a potential private lender. How you get to this point is up to you, but when you want to specifically talk about real estate and them lending you money, here's what you say. Do you have any interest diversifying your investment portfolio and taking some of that money and investing in real estate through me? I'm a real estate investor and I offer double-digit returns to my investors and have 100% repayment history. Now that's kind of generally what you can say, especially if you have that history. You don't want to guarantee a return, and you definitely don't want to come across as desperate because they're not doing you a favor. If anything, you're doing them a favor, but in general, it is a good win-win scenario. But depending on your experience and what you're looking to do, just talking about them diversifying, getting out of the stock market, backed by real estate, backed by you are generally the points you want to get across. All right, let's talk about how to build some trust, and then I'm going to give you that 4-pillar pitch. So this is a person that you have a relationship with, or somebody that you have a relationship has introduced you to. These are going to be people that you know, or maybe like your grandparents' neighbor or your parents' boss or a family friend. So you have a relationship with them. You need to make sure to be professional, even if it's your mom or your dad, which doesn't happen very often. But if it does, tap into that resource. There's nothing wrong with if your parents have some extra money, either a lot or a little, and they want to invest in you through real estate and you give them a return. There's nothing wrong with that. Some people make fun of people that borrow from their parents. I didn't have parents that had that kind of money, but I don't bemoan anybody that does. So you need to be professional. You need to have a presentation. You need to be able to present an agenda as well as somewhat of a pitch deck when you're meeting with them, no matter where you're meeting them. I remember when I met my private lenders all for the first times when I was developing that rapport and building those relationships, we had an agenda every single time, and I had real life examples to show them. The agenda was fun. One of my private lenders was a family friend. The agenda would say, step 1, pleasantries. Step 2, order a drink. Step 3, cheers on the drink. Then it would be market update. Then it would be what we have coming up. Then it would be order second drink. Like, you can have fun with it like we did. You know, obviously we're at a bar having these conversations. So just think of it as a business meeting. Of course you can have fun, but I don't want you to treat it like a suit and tie type of meeting, and I don't want you to treat it like you're just hanging out and you're just having a casual conversation. It needs to be somewhere in between, because that will build some credibility and build some trust in you. You need to be talking about your experience if you have it. Give them real life examples if you have that as well. If not, give them realistic examples of what the deal could look like. Keep the numbers very, very simple. Don't overcomplicate it. Show them the general rough numbers, and if they want to dig in, of course, be able to dig in, but don't overcomplicate it at first. And actually, a lot of our students inside of my community use us as a reference. They say, I'm in Sam's mastermind. Here's who Sam is. I'm in his community, and I'm able to lean on him. I'm able to get a second set of eyes from his team. I'm able to ensure that it's a good deal before I get it under contract. That's another level of security for the private lender, knowing that they have us to lean on, and especially if it's your first deal, giving some type of backbone or some type of second set of eyes is huge for that private lender. So if you're in my community and you're not using us as an example, make sure you are. All right, let's get into the pitch now. This is probably the moment you've been waiting for. If you're still watching and you haven't hit that like button, come on, help a brother out and hit that like button, okay? All right, this is what I call the 4-pillar pitch, and this is when you're asking for the money. You've already talked to them or text them or emailed them. You've already had that initial conversation and planted those seeds. You talked through some deals, and this is what you tell them to secure their funds. This is the last thing you tell them before you ask for their money, to give them the most level of security and to give them the most peace of mind to give you their hard-earned money. There's 4 pillars. The first pillar is a personal guarantee. A lot of people say, no one's going to lend me money, or why would someone lend me money if I don't have any skin in the game? Well, you just personally guaranteed it, so your entire skin is in the game. Now, some people may or may not want to do all 4 of these. I should have prefaced that. You can choose 1, 2, 3, or 4 of these to do. Just know if you borrow from like a hard money lender or a banking institution, they're going to require all 4 of these, so there's something you have to do anyway. So I have no problem doing this with private lenders. That personal guarantee is a simple document that states that you are personally guaranteeing their return. You can figure out how tight or loose you want that lingo to be. However, offering them a personal guarantee of 10, 12% return on their money is something they will not get at any other investment. I promise you that. The second pillar is a promissory note. Now, I would think you would want to do this. I can't think of a scenario where you would not, but this is a legal document between you or your LLC preferably and them or their LLC that just lays out the terms. It talks about the return, the timetable, if someone has to sue somebody, what court that is in. It gives them identification and things like that. You can find these on ChatGPT, or you can find these online, or if you're in my community, you have access to all this paperwork, all these presentations already for you. But if not, just know that you can find this online very easily, and it's a promissory note. You're promising to pay them back. So you're offering them a personal guarantee, your LLC is offering them a promissory note. This is some security. We're only halfway through this pitch. Trust me, they don't get this from any other pitch or any other investment they have. The third pillar is a no-brainer, and that's putting them on the insurance policy as an additional insured. This is free. It costs no money. In order to buy a property, you need to have insurance on that property, fix and flip insurance, and you're going to be getting insurance anyway. All you have to do is tell your insurance carrier or your insurance broker that you want your private lender put on the insurance policy in the insurance certificate under the additional insured section. It's very, very simple, and it's free. It costs you no money, but it just gives the private lender some security and some assurance that they are on the insurance paperwork, meaning if the house burns down, they technically have some rights to those insurance funds, which is no problem because it's their money anyway. Again, that's a no-brainer. And the fourth pillar that you may or may not want to do is having them be on the deed as partial owners of the property, of course, until you pay them back. This just gives them foreclosable rights. The title company or real estate lawyer that you work with will easily be able to add them and add this to the closing documents. And this just gives them some ownership rights to the property that they can foreclose on, or if you get hit by a bus the next day, that they have some ownership rights to that property. And again, these are all things that hard money lenders are going to require anyway, and I have no problem doing all 4 of these. I don't technically have to on every loan that I get anymore. I mean, I've done over $60 million worth of loans in repayment history, so I've got some credibility with some of these private lenders. We don't usually put them on the deed anymore. We have a personal guarantee that we sometimes sign depending on them, but we always do the insurance and we always do the promissory note. So just pick and choose what you want. My personal suggestion is, if you really believe in yourself and believe in real estate, to offer all 4. If you've had some good conversations, it's very, very unlikely that they're going to say no if you offer them a 10 or 12% return, personally guaranteeing that promissory note on the insurance policy and on the deed as actual owners. And of course, when you refinance or sell, they come off of that. So that's my private lender information. Hopefully you learned a little bit. If you did, comment in the comment section with what you learned, or ask any question. I personally answer those comments, and I will get back to you and answer it and put some thought into it. If you like this video, make sure to subscribe to this channel, hit the notification bell, and I will see you on the next video. Learn more about real estate here